Good evening, everyone. Welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do in the coming week, which is the monthly expiry week. And the first monthly expiry week, like that for Bank Nifty, after the weekly expiry has been stopped. All right. So, as mentioned in the earlier sessions, 23,200 and to 500 was the area where we could potentially see a turning point based on smaller time frames. And that's what the index has been doing. Monthly trend is still up, though we have a very strong bearish candle on the monthly. This month we is still not over, and it would be interesting to see how this candle closes, whether it goes in or comes down. Let's take a look at the weekly chart. On the weekly, last week, last Friday especially, markets went up, and this week, today, we hit the weekly EMA and this area of supply from where we had a breakdown and broke this area of supply zone. So, got to be a little bit cautious about the price action here. We could probably see more of a range bound price action, and if we get a pullback on smaller time frames, we can decide to go long. The next area of supply zone is here. So let's say that's the supply zone. This is the area of demand zone from where we are moving up. That's a range. We moved up, found difficult to move around the weekly away. So that's going to be the range. If market starts moving up, probably next series we could see markets making an attempt to move towards 25. 200. That's why any pullback, let's say we get towards 23,800 to 24,000, could be a buying opportunity for the short term. On the daily, after a strong gap up today, probably because of the election results, we gapped up very strong, but are still holding this area of supply zone. So technically, the supply is here, and that's where we are right now. So we hit about 24,300. Now markets can still move up and go till 500 to 600. But today there was an opportunity for it to still go up, but it failed and ended in an indecision candle. Though this is a strong rally candle by virtue of the gap. If we come down somewhere here, close to the, let's say, 24,000, maybe that could be a good buying opportunity. We have a drop-based rally kind of scenario here. That's the original demand zone on the daily, which is holding up. That's a demand zone. Strong move, took out 5 days, and today's gap up took out another 3 days. So short-term bias will be to the upside. Shorts on confirmation, maybe spreads for this expiry. And once we pull back, we'll take a look at the 75-minute chart. We and if we start moving up, that's the minimum target that I would see Nifty making an attempt to go to, and about, let's say, 25, 200 to 300. On the smaller time frame, that's what we see. We hit this area, maybe smaller time frame, 5 minute supply zone, and strong pullback. So that's the area of demand zone from where we have gone up, but technically there is still no achievement. So we could potentially come down all the way till this. That's a very good opportunity to buy, but looks like this might just hold and prices will move up. At least up to this area. That's the supply zone that I'm expecting it to move eventually. I don't know whether that will happen this series or next series, needs to be seen. But if we come down here, there'll be a good opportunity to buy for at least a target of 24,500 for the short term. So slightly bullish bias, but on pullback, we need to add. If it starts moving up, maybe you're better off trading stocks rather than the index, because the index has moved up nearly 1,000 points in a matter of 2 days. So be cautious. The reward to risk might be less unless it pulls back. The other thing to be worth noting is that though India VIX has come down, it's still above 15, which is which could push the markets either ways. So the moment we start coming below 14 and 13, that's when probably the trend would be shifting to the upside, or might just remain range bound between 14 and 16 India wicks for this coming expiry series. Uh, Coming to Bank Nifty, the Bank Nifty, as mentioned earlier, was much more stronger as compared to Nifty, especially private banks and today public sector banks. So Bank Nifty is range bound, can potentially move towards 52,500 to 53,000. Need to see whether it does it in this expiry or next, uptrending, range bound at the current area. On the weekly, that's the area where Bank Nifty might make an attempt to move towards, which is 53,500, provided we go beyond 52,600 and close. And that should be also probably a daily or a weekly close to add more odds. After that, we could see a big green candle coming in here, all the way till 53,500. That could be your immediate targets. The demand zone that's holding is here. So we are in the middle of the curve and we are moving from down to up. So make sure that shorts are only short term, and on pullbacks, you can go long. If you don't get a pullback in Bank Nifty, you can look at a lot of banking stocks. They would give you good opportunities. Uh, Now, probably there could be some reaction to this supply zone, but I'm not a big fan of this supply. The supply originally starts here at about 53,700. But this supply is still important because every time it came, it has been able to push down very strongly. And that's where Bank Nifty has closed today, which makes it liable for profit booking after this move. And we could see it coming all the way towards, let's say, the daily EMA or this gap that is at 51,200, or at least it may pull back here, and then you watch the price action to decide to go long. So unless we take off 52,500, forget about these targets for joining, since the gap is pretty huge. So if we start moving below the gap, there is a good chance we could just slip quickly and come and hit this area of demand zone on Bank Nifty. Again, it has taken on the supply, and on the daily, there is still nothing except for the daily EMA, but could still be a good area to go long for higher targets of, let's say, for 50 to 800, and then probably subsequently 53,500 to 600. Uh, if, let's say, corrective move happens again, because this is more of range bound, we could even come here. So be cautious when you want to buy here. Maybe on confirmation you can buy. This could be again a good area to go long. But remember, this is going to be a monthly expiry for all the indices and even stocks. So you could see volatility staying up. So be cautious. And right now we are high on the curve. Wait for pullback to go long, or be stock specific for going long. FMCG is pretty good and has come down quite a bit. So you can look at some of the FMCG stocks, longs. So bullish bias on pullback, shorts on confirmation, but they will be only short-term shorts, like a couple of days. And once we come to the decided, discussed levels, longs can be initiated based on confirmation and overall market scenario. The only danger is, remember one thing, next week we are again going to have our RBI policy. So if Bank Nifty comes here, and if you're short, that would be a good thing to exit, and also uh, maybe go long here for a higher target, which could happen before the RBI policy or post RBI policy. Who knows what the RBI policy is? Right. Trade well, trade safe.